Good morning. This is Japanese Economic Review Channel. Today is May 18th, 2026. We are navigating a complex market environment characterized by significant macro pressures and a sharp sell-off in the tech sector. As global markets react to shifting economic data, we will analyze the contagion from the US to Japan and identify where the market is finding its footing. The current volatility is driven by a double hit to sentiment. First, geopolitical stress from stalling US-Iran ceasefire talks has sent WTI crude prices surging. Second, the NY Fed Manufacturing Index came in at a shocking plus 9.6, far exceeding the 7.3 consensus. These factors have reignited inflation fears, pushing US 10-year yields upward and making equity valuations, especially for growth stocks, appear increasingly stretched. The impact on the US was immediate. The Nasdaq ended a 3-day winning streak, shedding over 410 points. Tech giants and semiconductor stalwarts like ARM Holdings, Micron Technology, and Intel bore the brunt of this yield shock. This wasn't just a price dip. It was a fundamental repricing of high-growth hardware stocks in response to a higher-for-longer interest rate outlook. Tokyo inherited this weakness. At 10:37 a.m. yesterday, the Nikkei plunged over 1,000 points, breaking the 61,000 threshold for the first time in weeks. Heavy profit-taking hit semiconductor leaders like Advantest and Tokyo Electron. However, notice the afternoon recovery. As the yen hovered around 158.80, selective dip buying emerged, signaling that long-term investors were waiting for this entry point. The breadth of the decline was significant. With 71% of prime market stocks falling, we saw a broad retreat in cyclical sectors, including transport, wholesale, and real estate. However, it wasn't a total exit. Money rotated into defensive pockets. Services like Japan Post and precision instruments like Olympus and Terumo actually advanced, showing a clear preference for stability over growth. Interestingly, the Growth 250 index showed resilience, turning positive after 3 days of declines. While some stocks like Trial Holdings struggled, we saw notable gains in QD Laser and PowerX. Most impressively, TerraDrone executed a sharp late-day rally. This suggests that for speculative capital, the story and technology of individual small caps are currently outweighing macro headwinds. Beyond the ticker tapes, strategic consolidation is accelerating. Nippon Steel is absorbing Sanyo Special Steel to streamline operations, while Bandai Namco is deepening its footprint in live entertainment through a stake in Udo Artists. Furthermore, Marubun's partnership with India's IASYS and United Oceans Maritime Tech Trials highlight a trend of Japanese firms investing heavily in data platforms and operational safety. In the consumer space, brand power remains a key differentiator. Toyota is expanding its iconic Land Cruiser line with the FJ series, and Sony is pushing the limits of imaging with the Alpha 7 RV size. We also see creative collaborations, such as Fast Retailing's Yoasobi collection, aiming to capture consumer mindshare, even as the broader economic outlook remains uncertain. In summary, while macro fears currently outmuscle micro resilience, we are witnessing a rotation rather than a mass exit. Rising yields are dictating the trough for tech heavyweights, but pockets of alpha are emerging in defensive instruments and high-growth tech. The key for the coming days will be monitoring if this afternoon's wait-and-see plateau can transform into a sustainable recovery base. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.